Hi friends, welcome to Trending Sutra. My name is Amit and this is our daily regular market snapshot podcast. So in today's session, market close in positive. It addressed the market correction of last few session, especially Bank Nifty rallied almost 500 point and Nifty closed positive by 50 points with a 50 points gain, approximately 0.26%. Bank Nifty 1.16% registered their gains. VIX fell drastically down by 5% intraday and it closed approximately around 13.3 during the closing of the session. Bank Nifty rallied almost more than 250 points in last 1 hour. And Nifty somehow tried to, get the support around 18,680, 670, and it tried to break 18,737.40, but it was moderately positive. Today's FIA data, as for FIA data, FIA sold approximately 131 crore, whereas DIA remained the net buyer with 772 crore. So effectively approximately 300-400 crore minus is the figure if we talk about in the cash equity. Dollar spot close down by 5 paisa, whereas the future down by 5 paisa in the future also. So effectively, rupee appreciated by 5 paisa on the closing basis. Uh, if you're talking about position wise, index future client remain positive, DIA is still positive, FII are still negative, whereas the institutional investor remain positive. As we are tracking this and we're taking in last few session, DII and institutional investor remain on the buy side in the market, whereas FIA remain on the sale side. So this is something which is very interesting. Despite of that, Bank Nifty rallied from its recent low, approximately 6,650 points in last two session, whereas Nifty remain dragging in the market, not that much positive. So, few factors which is actually driving the market right now, where if we see where the market is heading. So after today's closing, Nifty has shown some positive divergence in the market, and this might be possible that after Reliance actually recover from its lows and arrested its correction. So we could expect that Nifty will getting towards upward towards above 18,800, and once it is breaking 18,700 in the spot, then we could expect approximately 100 or 150 point of rally in the market also. So positive Nifty could trade positive. Whereas the rally in the bank Nifty could extend beyond 44,000 or 44,300 technically because of the breakout and it is hitting new threshold time high. But considering like rupee in the full in last 1 month, if we compare few uh, data like dollar index actually has fallen by more than 5%, whereas rupee has lost 0.6%. So approximately 5.6, 5.5 or 6% of divergence between dollar index and rupee. This comes on the backdrop of oil fell by more than 20% last 1 month and it fell approximately 10% last 5 days. So in last 5 days, rupee actually depreciated by almost 2.5% from its recent low. And whereas oil actually fell by 10% and dollar index also fell by approximately 0.5 to 0.6% in the last 5 days. So surprisingly, why it's so much of movement in the rupee? Why so much rupee is getting weaker and weaker? So this is something which we remain cautious in the market in the current rally. But as a matter of fact, since data is now turning positive and favorable to the market, so the texture and trend remain still buy on dips in the bank Nifty, whereas Nifty could see some buying at these level, and we could expect some further buying as long as 18,600 is holding the future and 18,550 in the spot for the Nifty. Whereas if we talk about in option data in the next weekly expiry, Nifty PCS stand at 0.74, quite moderate. Maximum point is still 18,600. Bank Nifty is at PCR at 1.31, which is approximately like higher and near to the overbought region, where the maximum point shifted to 43,500. If we talk about the option activity in the market, maximum over interest added at 18,600, where more calls were added at 18,600 than put. But they were mostly like 48 lakhs call added, 43.43 lakhs put added. So approximately 90 lakhs put and pull both added in the next weekly expiry around 18,600. So it will be quite interesting considering the premium of both strike price will be around approximately 250. So 250 point of a kind of a range we are expecting in the next week. That's the market participant may likely to be target. Talk about Bank Nifty. Put writer actually has aggressively made their position from 43,500 and 43,600, and they are very much comfortable around 43,000. Whereas on the call side, they are okay with 43,600 and 44,000. So the highest position build up at around 43,500 and 44,000. So in such a low VIX, if call writer are adding their position aggressively, just 200, 300 points far away from the current price. So there is much more possibility and probability that we could see sharp, breakout level in the Bank Nifty. Whereas again, above 18,000, as I stated, Nifty could see some positive movement. On the downside, as long as 18,550 is holding, you could expect that the market will remain on the buy side. If we talk about Nifty contributor, 27 were positive and 23 were negative. Measured like ICICI Bank, Axis Bank, Infi L&T, HDFC Bank were the major contributor on the positive side, whereas the Nifty Tiger were Sun Pharma, TCS, Kotak Bank, and ITC. Market Nifty almost like close in a mix. That's why. Whereas in the Bank Nifty, except Kotak Bank, all the banking stocks close in positive. And Axis Bank, ICICI Bank together, Axis Bank, ICICI Bank, and Bank of Baroda, all these three stocks contributed almost 70-75% rally in the Bank Nifty. So Axis Bank is today up by 2.7%, and it fueled the rally in the Bank Nifty. So somehow the index is managed quite well in the Bank Nifty, and it remained towards the upside. Contrary what we were expecting, that market may find some correction or it could fall after the event. So that's not what exactly happened. Going forward, we expect that the trend could be little biased toward on the buy side, and market now will be looking for next week Fed event, and obviously how rupee and oil is mm, uh, going to be traded in the market, like how it's going to be, move forward in the market. That's it for now. Thank you for watching. Kindly subscribe our channel, like this video, and share. Thank you.